guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure. Hey everyone, welcome. Thanks for joining. Good evening. We're gonna get started in a couple minutes here. We're gonna go for a full 2 hours until 8:30, and we're gonna look at the charts. We're gonna do a top-down analysis on gold from the daily 4 hour, bring it down to the 5 minutes, and see how the Tokyo and the futures market open up. Okay, and we'll just go over today's top news, and we'll get right into it. Okay, so just give me a couple minutes, and we're gonna get started. I hope everyone's having a great day, and we're almost done this year. We're almost at the finish line, so let's just continue trading smart with proper risk management, and let's finish off this year strong.
Hey guys, good morning, welcome to the live session of Stocks Number Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Recording in progress.
Hey, welcome everyone. Thanks for joining Stocks Number Trading. My name is Ron. My partner is Dave. Good evening, everyone. It's 6:30 p.m. Eastern time, and it is Tuesday, December 16th. So thanks everyone for joining. Today we're going to have a full session. We're going to go 2 hours right into it, right into 8:30. We're going to do a top-down analysis on gold. We'll start on the higher time frames, and then we'll bring it down to the 5 minutes, and we'll look for if we see any setups, or we'll see how the markets are moving, and hopefully we learned something new tonight. And I just want to go over today's top news, and there's a lot developing, and we're getting into the end of the year, which is leading into that what is known as the Santa Claus rally, and we'll talk a little bit about what that is and the specific days when traditionally that happens. Okay, guys, I hope everyone's having a great day. And just to reiterate, this morning was very, very, very high impact. There was a lot of back-to-back red US folders, a lot to digest. And so, these are those days I told you guys, take it easy going into these days, because you could do something silly and you're going to regret it later, where you didn't have to engage in that style of trading when there's high impact news. Okay, so this is why you got to learn all about risk management and to de-risk in situations like this, and to know when the markets are trading much better, then you can increase your risk accordingly. Okay, and hope everyone's having a great day. I'm feeling much better than I did yesterday. I could feel that I was getting a little bit of a bug. I went right had a little workout right after the call, went into the sauna, got a good night's sleep, and eggnog with some rum helps out too. So I'm feeling much better, and hopefully we can finish off this week strong. Okay, so first thing is today's news. I'm not going to go over everything because it's already happened. But at around 8:30, it was a lot to take in. So there was a lot of US folders. There was 2, 4, 5 of them. You kind of had NFP kind of clumped together with the retail sales. So it was a lot to take in. Look at the average hourly earnings month over month. So the previous month was 0.4, which was pretty good because it was rising for the previous months prior to that. And they were forecasting a 0.3, so a little bit of a decrease in the hourly earnings. And look at what the actual result was, 0.1. So that's a dramatic decrease in hourly earnings month over month. Core retail sales came out pretty good on the core retail sales. Remember, core retail excludes automobiles. Non-farm employment change, you can see how they revised the numbers. This was a positive number, and they revised it from the previous negative 105,000. Okay. And their forecast was this for 51,000. Yes, it did exceed the forecast, but again, this number might get revised and we'll see actual, the truth behind this number. But 64,000, yes, it did beat the forecast, but 64,000 is still not a big number. You know, for all of America, month over month, to create just 64,000 jobs is not very good altogether. But yes, it does show green. But this number is a little like we got to follow this revised number of negative 105,000. Okay. So they haven't really created any jobs since April. So the total non-farm payroll employment changed little in November, that plus 64,000, and has shown little net change since April. I don't even think it's grown. Like even when it says net change positive, just a little bit, they're pretty nice over here. I'm not being nice. They haven't created anything, to tell you the truth. The US BLS, this Bureau of Labor Statistics, reported today in November, the unemployment rate went up to 4.6%, which was little change from September. So we got to talk about that. So our retail sales month over month was down. This is including automobiles. This one was unemployment rate kind of, we see week over week, it's been kind of increasing, but this one is a big one. This is the month over month. So they were looking at 4.4. They were looking for a little bit of increase to 4.5 on unemployment. We don't want this number going up, right? The more unemployment we have, the less individuals we have working, less contributing, less paying taxes, and probably applying for unemployment benefits. So it's not good for an economy. We want to see this number going down. But unemployment went up to 4.6. That's why it's red. It's not good for the US dollar. So, you know, we don't want to see this hovering in America to 5%, because then things are going to start getting a little volatile in the markets. If you think this is volatility, you haven't seen anything yet. Okay. So these numbers are what we're going to monitor starting the new quarter of the new year. Okay. So they released all that. Also, the flash manufacturing came out. Again, disappointing. You know, they were looking for 54. They got 52.9. So it came out red below their forecast. Above 50 is still considered an expanding manufacturing market, but still, when you're getting close to 50 or below, you know, it's getting near those manufacturing numbers. And if you don't have manufacturing numbers growing, again, how is that going to affect jobs? So everything is tied together. And I believe, I know some people don't want to hear the word, but I believe tariffs have a lot to do with this. Okay. I'm on the sidelines. I'm not an American. I don't live in USA. I have no bias, nothing. I'm your neighbor in Canada, and our economy is shit too over here. So I'll be honest with our economy here in Canada, but you don't want to see America's 10 times the size of Canada. So we don't want to see this getting below 50, because then we got a contracting manufacturing industry, a contracting economy. There's going to be more layoffs, more unemployment, and you guys can understand the picture there. Okay. So I will be closely monitoring this going into the new year, as I do every single day. But now it's getting to some interesting levels. Okay, so that was all released today. Tomorrow in the news, again, if you guys are going to be trading tomorrow, not much going on except for our crude oil inventories. I also want to talk about crude oil because it's reaching levels at $55 a barrel and could even go down even lower. So it's coming to some great opportunities to look for some swing buys. However, it's still going down. So it hasn't kind of bottomed out or hasn't found a solid support yet. So it could continue to go down. And then tomorrow night, right after our session, President Trump is speaking. Okay, so that's the news. Right around whatever we got going on in here. Let's see. A lot of news is Canadian news. This is a Canadian website, but it does still talk about what's going on in the U.S. as well. I follow both U.S. and Canadian news. I'll talk a little bit about oil and OPEC going on. Tesla closes at record high. So Elon Musk in the new year is they're IPOing SpaceX, and it's set with like a IPO price of 1.5 trillion. So I think it's pretty high the way how they are already releasing its debut at 1.5 trillion. Who knows? That could be a 3, 5, 10 trillion dollar company in 5, 10, 20 years from now. But there could also be, when it IPOs, a pullback and then you get it cheaper. So I'm watching that as well. For SpaceX will be launched in the new year. Yeah, so I wanted to talk about some other things also. Guys, there's a free Telegram channel pinned at the top of YouTube for you guys. Let's see if we can get 100 viewers tonight. We're at 84, so please like the stream if you guys can. If you guys get some education, if you guys are learning something, yes, we will get into live trading. I see some of those questions you guys are asking. Yep, we're going to get into it, but we got to go through. We got to go through our routine. This is my daily routine that I do before I get into any trades. I want to know what's going on around the markets. I don't want to just jump in on the candlesticks and start trading when I have no idea what's going on with today's news or what is generally going on in the markets. Okay, you shouldn't be doing that either. You should have some sort of routine that you go to. You don't have to copy what I do. You got to have your own routine. Okay, so this Telegram channel has all of our free everything that we offer here at SST at no charge for you guys. It's got all of our live links to our YouTube channels, has our blogs right over here. I want to talk about this one, the Santa Claus rally, what it is, what to look for, and traditionally what it is, and why have you maybe heard the Santa Claus rally. Okay, it's because it's approaching that time. So let's learn a little bit about that. Guys, I still see a lot of you guys are still struggling with psychology and mindset in trading. We're doing these blogs. We're going to do more of them. I'm doing a series right now for all the snipers. So because I know how important psychology and mindset is, and some of you guys still need to improve on this. Everyone needs to improve. I need to improve on a daily basis on my mindset, because every single day you got to go through this. So you got to learn this, guys. I know technicals are important and fundamentals, but nothing in my opinion is more important than psychology and mindset. Okay. Without this, doesn't matter how much you know about technicals or fundamentals, because you won't last in the markets, because you're going to lose all your money. So it doesn't matter how much you know about price action and candlesticks and figuring out points of control and shit like that. If you don't have your psychology and mindset game correct, forget about everything else. The dominoes will fall apart, and one by one, everything will just fall apart. So build it brick by brick, build it up with a strong foundation, and starting with your psychology and mindset. That's where your foundation is. That's where your support is. That's where you build off, and then you go from there. Okay. I wish when I started trading that I learned all about psychology and mindset first thing. I learned it last, right? And that's why I struggled as a trader for all of those years. So you guys can take my word for it or don't. It's really not up to me, but I know what most traders struggle with and why they can't get it going and get it together. I know it's because you're lacking psychology and mindset. Okay. And that's the free blog available, free Telegram available for you guys. If you want to visit our website, guys, we have a lot of education. Okay. If you're looking for education over the holidays and you're looking, this is the new series we're starting right over here. The Psychology of Mindset Coach will be released every other Fridays. So I'll be doing this, and our first one will be coming out this Friday. Introduction to Trading Psychology. I've already pre-recorded it, and it's going to be ready to be released. It's 47 minutes. I talked a little longer this one, but I promise you, I'm working on getting them down under 30 minutes. But this one, I was first one, really wanted to kind of introduce this series and what we're going to get out of it. Okay. And guys, here's the free blogs available for everybody. Lots of blogs. We talked about NVIDIA. We're going to talk about Apple this week. We had the FOMC we just came out of. These are your member-only outlooks, the SST Market Pulse updates for the week. We had our Psychology and Mindset blog. And this one right over here, I just want to go with you guys, is the Santa Claus rally. Okay? Explanation with examples. What is this Santa Claus rally that you hear often in the markets this time of the year? So the Santa Claus rally refers to a seasonal phenomenon in the financial markets where stock prices tend to rise during the last week of December and the first 2 days of January. So let me reiterate and repeat the dates, because this is where a lot of traders get the dates incorrect. They think all of December is a Santa Claus rally. They think it's all of January. The dates that specifically is the Santa Claus rally is the last week of December and the first 2 trading days of January. Okay, so you can look on the calendar when those are, and that is what is traditionally known as the Santa Claus rally. This rally is named after the festive period around Christmas and New Year's, which is often associated with optimism and positive sentiment in the stock markets. And here's Mr. Santa Claus at the New York Stock Exchange. And he's spreading the pips around for everybody. Reasons behind the Santa Claus rally. Number 1, investor sentiment. The holiday season brings a generally positive mood among investors. This optimism can translate into increased buying activity in the markets. Number 2, tax considerations. Some traders are doing their taxes at this time of the year and offsetting their losses. So tax considerations. Towards the end of the year, some investors may engage in tax loss harvesting, selling off losing investments to offset gains. So if you have a portfolio right now and you've made some substantial gains, let's say, for example, in the tech sector, and maybe you're in crude oil and it's dragging you down. So what some traders and investors do at this time is to offset. So what they do is they engage in tax loss harvesting, selling off their investments to offset gains. So this is where they unload like losing securities so that they're not on the balance sheet anymore and they can claim taxes and things like that. But again, I'm not an accountant. So if you have tax questions, please speak with a licensed accountant and they'll break this down for you guys, okay? So earlier in December, by the end of the month, they may reinvest or reposition their portfolios, adding to buying pressure. So after they do this, they offset their losses, then they could be, by the end of the month, going in the first couple days of January, buying back. And you can see that some securities are at good discounted prices. So this is why traders and investors use this style at the end of the year, and this is why it's called the Santa Claus rally for this specific reason. Holiday bonuses. Some of you guys work at your jobs, employment, you're getting a holiday bonus. Some investors use holiday bonuses to buy stocks, securities, increasing demand in the market. So that money coming in, those bonuses, some disciplined traders take that money and put it into the stock market as opposed to buying a snowblower or something, that's what I did. I'm going to buy a snowblower instead of investing in the stock market because I really need a snowblower. We're getting a lot of snow lately, and me and my shovel, I broke my shovel the other day, so I got to start investing in a snowblower now. Low trading volumes. During the holidays, trading volumes are typically lower due to many traders and institutional investors taking time off. So you'll see a lot of professional traders taking the last couple of weeks off. Obviously, it's the holidays and maybe going on vacation. So you're going to see the volume is going to start to dry up. Lower volume can lead to higher volatility and more pronounced price movements. So this is where you might see a more whipsaw action, lower volume, bigger moves, wicks on candles, spreads are increasing, choppy trading volume, and that's what you might see in the last few days of the year. Window dressing. So fund managers might buy top performing stocks at the end of the year to present a better looking portfolio to clients, driving up prices. This is what's called window dressing. It's a tool used by fund managers. Like if they had a rough quarter the last year, maybe what they do to dress up and make their portfolio look a little bit better going into the new year for potential clients is looking as to buy maybe some securities now, driving up prices and making their portfolio look a little bit more better for potential clients in the new year. And that's called window dressing. The historical performance. Historically, the Santa Claus rally has been observed fairly consistently, although not guaranteed every year. Okay, you got to understand that. Go back and back test. Look at those days I mentioned last year and look at the first couple trading days of January last year. This is where you can start to back test and learn. How was it last year, same time this year? So you can go in and look at that yourself. And will we get the same kind of event or maybe not? So nothing in trading is guaranteed. Every time I talk about the Santa Claus rally, it doesn't guarantee anything, but it's something to just understand what it is, and if it happens, then you know why it's happening. According to data analysis, the US stock market has shown a tendency to rise during this period more often than not. So when we're talking about probabilities, it's got a high probability there could be a Santa Claus rally going into the end of the year, start of the new year. Unless some news dictates something different, right? And we're getting a lot of news coming in the markets on a daily basis. Implications for traders and investors. Number one, opportunistic buying. Traders might take advantage of potential short-term gains by anticipating the rally and positioning themselves accordingly before it starts. So maybe we're seeing a little dip in the markets right now, getting ready for the Santa Claus rally. And if markets are traditionally at lower pricing, that's appetizing for investors to buy. It's not like they're buying now the all-time highs going into the Santa Claus rally. There's a little bit of discounted prices on various securities. Number two, portfolio rebalancing. So this is when investors are rebalancing or diversifying their portfolios. Investors could use this period to rebalance their portfolio based on the year's performance and future expectations. Volatility awareness. Understanding that lower volumes can mean greater volatility helps traders manage risks effectively during this period. Strategic planning. Investors should consider how the rally might impact their long-term strategies, particularly if planning to make significant portfolio changes. So just a little quick example of a Santa Claus rally. In the S&P 500 index, various studies have shown an average increase during this period historically, although specific years might deviate from this pattern. For instance, between 1950 and 2020, that's a 7-year span, the S&P 500 gained approximately 1.3% on average during these 7 trading days, according to the Stock Traders Almanac. And cautions, okay? So while the Santa Claus rally is a well-known phenomenon, it's essential to approach it with caution. Market conditions, broader economic factors, and geopolitical events can overshadow seasonal trends. So, if there's a war that starts during this week and it goes into the new year, probably whatever geopolitical events we have at that time could negate this, okay? So you got to understand, it's not always guaranteed that this is going to happen, but you can look at the history and you can see the overall returns depending on market conditions. Obviously, no guarantees. This should be for everything. This should just be for everything, anything to do with trading. No guarantees. Nothing is guaranteed. Past performance does not guarantee future results, and the rally doesn't happen every year. I've seen years where it's called the Grinch rally, where it's not a Santa Claus rally, and Grinch comes in and spoils the rally, and it's real selling pressure, and it goes into the new year, and it continues the first couple of weeks of January into February, where it's just a bearish outlook, and that's called like a Grinch rally. So it's happened in years, and it could very well happen this upcoming rally. Like nothing is guaranteed. We take it day by day, and we take it candle by candle. Finally, in conclusion, understanding the Santa Claus rally helps traders and investors capitalize on potential seasonal trends, optimize their tax strategies, and refine their market outlooks going into the new year. However, they should remain vigilant about broader market conditions and ensure their actions align with overall investment goals. Merry Christmas and happy holidays to all of our SST snipers. And remember, Santa knows when you're managing your risk and when you're not. So, whether you guys are over leveraging, believe me, Santa can see when you're being naughty and he knows when you're not, when you're being good. So please, let's all manage our risk together appropriately because Santa's watching us. Join the Stock Sniper team and take your trading in 2026 to the next level. You can join us here with the link and join our website. Tons of education, lots of live sessions. Guys, going into the new year, just so you guys know, next week we will only be doing Monday and Tuesday because it's Christmas Eve, Christmas Day, and Friday. And then the following week, again, Monday, Tuesday, then it's New Year's Eve, New Year's Day, and then we'll ramp things right back up on Monday, January the 5th. So just Monday, Tuesday next week, and Monday, Tuesday the following week. And then the banks are obviously closed, so we'll be taking time off too, okay? As you guys should be too, okay? So all of these blogs are available for you guys. Let's get started. Hit the like button, guys, if you haven't already, and please subscribe to our channel. We're at 91,250 subs, and we're well on our way in the new year to top off 100,000 is on the it's in the forecast, okay? And I'm giving some forward guidance that we're gonna get there. We're gonna hustle, we're gonna work hard, we're gonna do lots of live trading in the new year, and we're gonna continue learning and earning together. So thanks everyone for joining. Welcome everyone on Zoom. Sergio, welcome. I'm feeling much better. Eggnog and rum does the job. It's just what the doctor ordered. So I listened to him and I'm feeling much better. Justin, welcome. Thank you for asking. I'm doing good. Conrad, welcome. Timmy, you're with me. I heard unemployment has gotten worse. Yeah, it's getting worse out there. You know, I have a lot of friends and family that live in the United States. And what better people to ask are people that live in the United States, and they're telling me where they live, it's getting pretty rough. You know, I don't listen to the news because, you know, the news is full of shit 99% of the time. So, you know, I don't listen to the mainstream media because I know it's all propaganda and it's all I go right inside. I talk to the people on the streets, you know, just like I do everything. That's where you'll get the most truth, and you'll see how the real economy is, okay? The stock market is not the real economy, okay? You got to understand, it's a playground for the rich, the elite. That's where they make all their money and they have fun. You know, they're billionaires. Whether the market takes a little bit of a dip, they are not worried if Costco is laying off 20 people it doesn't affect them. You know what I mean? And 90% of people do not invest or trade the stock markets. So they're not impacted. So whenever Donald Trump is saying stock markets are all-time highs, you gotta understand like that only represents like 10% of the population. So the other 90% are not in the stock markets, and the real markets, the real economy is showing high unemployment, lower wage. You can see a depreciating dollar, inflation going up, decreasing Medicare. Like it's all it's a recipe for disaster, but they can't go out and say that. If they do that, that could cause chaos, right? So they got to paint the picture like everything is amazing. Everything is like Donald Trump said, A++++, right? You know, I don't even say that. When I see an A+ setup, it's just an A+ setup. It's very rare that I see an A++++ setup. So you know he's full of shit when he's saying that. Okay, guys. One other thing. Did anyone get an alert on a 4-hour swing buy coming out of the box? Was I the only one that got in on this candle today? Look at what happened. It came right back down. Remember what I said. Here's that consolidated box from yesterday. Stretch it into the future. You see how the sellers came right in there. As soon as they hit that yellow line, did I not tell you guys yesterday, mark up 4,275? If you guys don't believe me, go back and watch yesterday's session because I verbally told you guys, place an alert right here. It came down right here, came back up and closed. Look at this candle. This is now Europe. It came up again below 50%, came right there again, stopped at the alert and came back up. That's your inside star, your morning star pattern, right? Remember I was telling you there's an evening star and there's your morning star. So you got to understand what these are. Not always guaranteed, but the Japanese claimed a morning star is like when it's nighttime and it's coming down and it's bleak and it's miserable outside, then you get a morning star. It's like the sun coming up and it's providing optimism. It's going to be a beautiful day. That's how the Japanese saw these. That's why these things are named after Japanese who invented this traditional candlestick over 200 years ago, okay? So you got to understand what these things mean because it's a language. When you understand the language, you can take it a little further. I'm not Japanese, but I've been studying candlesticks all of my life, pretty much half of my life. And I recognize this pattern. So when I see this, again, it came down, look, you got a rejection there, a rejection there, a rejection there. So it's showing me, and these are 4, 8, that's 12 hours. Like that's a big span of time. And this is now representing New York and the New York volume. So it dipped all the way Asian session, Europe came right in there, and then it bounced right out of there. Right there, I got into a buy at 4,287. As soon as it broke the box, I was in a buy and it came back up. It closed 99% near the high. The next bar opened bullish and it continued to break. As soon as it tapped into this yellow line, that was approximately 400 pips, and I took out 80% and left 20% running. I have 20% running right now, and I want to see if my runner can continue to break out. fill that wick and maybe get back up to that, this zone, and we're not too far away from the all-time high supply, all-time high up there. But it got rejected there, and one more rejection, and maybe we come back down. But again, if you mark up 50% of that candle, you can see we're still holding it, and you continue to move candle by candle. So did anybody get an alert, or do you understand why these are static levels and we just allow the volume to come down? Look how many swing trades we could have took this week. Just look at it. This is when you're back testing. There was the swing buy. You could have, if you wanted to sell, you could have, but if not, you could have bought that one move coming right back up. You could have took the second leg short right there, and then you could have bought this little bounce rate coming right back up. Now, again, we're in consolidation. So if you add up like these legs, there's thousands, 2,000, 3,000 pips could have been made in the markets. You guys understand why swing trading, if you trade with micro sizing, smaller sizing, and you allow these things to move, they can really add up rather quickly, okay? So we're not doing swing trading tonight. We're going to do a top-down analysis, bring it down to the 5 minutes, but I always have to remind you guys, because this was the reason why we introduced swing trading. You got to continue to place alerts at these areas. And you see they didn't break December monthly low, the purple line. It came in there, so they're protecting December's monthly low after they broke it out, okay? So maybe we have more momentum going into next week that gold can continue to try and attempt to break the all-time high, okay? So let's go now into gold, brand new chart. This is the 5 minutes. This is how it's moving right now. But what I'm going to do is a top-down analysis, okay? Justin, you got the alert. You sold at 4335 this morning. Still have a runner running. Perfect. Good job, guys. Lee, oil tested the April 9 low and has made a small rebound. Lee, I was just going to talk about oil myself. Okay, guys. So real quick about oil, because tomorrow is the weekly sorry, guys, it's just off of the top of the crude oil inventories. And I was speaking about what is OPEC. We got to learn what is OPEC, guys, because it's the Organization of Petroleum Exporting Countries, okay? A lot is going on in North America. Like the oil fields here in North America, Canada, and US are drying up. They've been drying up for decades now, okay? That's why maybe US is knocking on Venezuela's door right now, because whether you think it's for drugs, I think it's more for oil. I've seen the same kind of thing happened in Iraq in the early 2000s. They used the same narrative. We're coming after weapons of mass destruction, and before you know it, they kind of had the oil reserves and all of the gold bars out of there and walked away, killing 1 million innocent people. So we've seen this. This is how the worlds work. It's disgusting, but I've seen this play out, and I was trading at that time when I was younger. And it's the same. It's in the same playbook. Anyways, talking about oil right now, it's at $55 a barrel right now. Okay, $55 a barrel is very low. Okay, I have friends that work in the oil patches, and they're saying that I didn't even consider this. They were telling me $55 at 2020 with the cost of inflation in the US dollar right now, it's basically at $43 a barrel. Which is, it's costing them money to produce. They're losing money for every barrel of oil right now. So OPEC and Saudi Arabia are kind of in control right now. They've got the upper hand. They got the cards right now. So depending on how Saudi Arabia plays this out, that's what we got to follow if we're crude oil traders, is follow what Saudis are doing and follow OPEC right now, because they can control the supply and demand. And if we start to see something developing in Russia, Ukraine, Middle East, it can really open up demand and things like that for crude oil, where we could see it going back up to 80 to 100 to 125 to $150 a barrel in the near future. So it could come down lower. Believe me, I had $58 on my radar. I got signals there, but it kept going down bearish on the higher time frames, and now it's consolidating right around $55 a barrel. So I want to see if it will come right at that psychological $50 a barrel, but it could, start to bounce out of this area. Obviously, it's at a great location for swing trading, but it could, be kind of like a dead cat bounce, and then go back down further. So, guys, I know some of you guys maybe don't trade oil, but you could look at it as a swing trade or a possible investment in the future. If you believe in crude oil, do you think the world needs crude oil? Do you think we can do without it? Do you think that there's enough supply going on around the world and things like that. That's where you got to kind of continue to educate and do your research, okay? I'll do a blog on what is OPEC because I think we need to learn what that is, okay? Now, let's just get into the charts. Sorry, guys, that was just off topic. And there's a few developing stories off topic, okay? Oil is a big one. I'm following. And also they're saying in Q2 of the new year, stock trading can go 7 days a week. It can be like basically like Bitcoin, where it's trading 24 hours a day, 7 days a week. I was talking about this like over a year ago. I remember I was talking about this, and now it's actually could be coming into fruition, where Q2 of the new year, we could see stock markets, Wall Street open 7 days a week. Now, how will this affect you as a trader in your strategy? Someone messaged me, said, Ron, I'm an ICT trader. I only trade the New York Open. It's my strategy, everything. And then they said, well, what if it's trading on 24 hours a day? Then volume doesn't just come in at New York at a specific time when the market opens, because now it's trading 24 hours, just like Bitcoin. Similar thing as like Bitcoin. I told him, it could affect your strategy if you only rely like on North American or a certain like London time, or like like when a market opens, like right now we're going to see how the Tokyo market and the futures open up. But you know what my response was to him? I was being as blunt and as transparent and as honest as possible. I'm not affected by if it trades 1 day a week, 5 days a week, or 7 days a week. 24 hours doesn't affect me because my strategy is not based off of like certain times of the day. It's, remember what I do. I follow live volume. So, and then I follow where I cut it in half. So whether this candle is at a specific time and it's not Wall Street, I don't give a shit. I cut it in half and I find my points of control. I can now find points of control 24 hours a day, 7 days a week if I want now. So I can tell you guys that my style of trading is bulletproof. You know, there's nothing to be scared about. You know, like a lot of traders are messaging me now and said, Ron, I wasted all these years learning this ICT. Now, if it goes 7 days a week, I'm screwed. I said, you're not screwed. It's just maybe that strategy won't be as effective. And can't you just learn what we're doing? Transition just to learn what's going on. It's basically the same shit you're learning. It's just this is representing the volume at this current time. You know what I mean? Like you see this candle at 11:45, this is what started that first leg up, this bullish candle. If this wasn't affected by any time in the market or nothing, if you just strictly cut that candle in half, you found the point of control. At some point, it came right back down, and look at it, tapped right into there, and it went right back up. You could have been in a buy right there. So there's a plain example of how this shit works at any time of the day. Doesn't matter. There's no like specific strategy that you got to learn while we're doing this. I will show you on a top down. I do the same shit I do every single day. You know what I mean? And I've been doing this for over 15 to 20 years. So I'm telling you, I've been through everything and I'm still preaching that this style works. You know, it's bulletproof. I'm telling you that. Like when someone told me, Ron, are you scared that the markets are going 7 days a week? Will it affect your strategy? I didn't even know what the hell they were talking about. I just said 7 days a week. That gives me more trading on the weekends. I don't want to do that. I'm getting older, and that's the last thing I want to be doing is trading on the weekends. But if it's open and I see a setup, that's why I have alerts. I'll try and make more money on the weekends now. You know, that's the way I look at it. Okay. So now we're on the daily. Look at what gold is doing. We're very, very close to the all-time high. So let's just do a quick top-down analysis because it's just after 7, and then we can watch how the markets move into the futures, and we'll see what's happening. So here's our all-time high right up here. All-time high zone from the orange line down to these bodies. Identify it and stretch it into the future. Wow. Okay. We've been trading in it on Friday. We've been trading in it on Monday, okay, right at the 50% level, right at half of it, okay? And are there any videos explaining how you find a point of control? I am doing it right now. I'm doing it right now. So if you pay attention right now, I'll show you how I'm doing it. I'll do it on this. I'll do it on any candle. I'll do it on this one. I'll do it on this one. I'll do it on this one. I'll show you exactly how to do it. I'll walk you through it where you will be a professional point of control finder in the markets, just give me like 2 minutes. Okay, I'll get you guys there. Also, sorry, I didn't want to be rude. Welcome everyone on YouTube. Thank you guys. Full-Dis9699, you are the first one. Thank you, sir, for joining. Trojan, welcome. Alex Ho, welcome. All the way from Scotland. Beautiful. Scotland is one country on my bucket list I'm going to come and visit in Edinburgh. It is beautiful. I have a lot of friends out there. It's beautiful. So one place on my bucket list, guys, is Scotland. I will be there. Hopefully we can meet up and we can have a drink together. Okay. Dion, welcome. Thank you for joining. Dave, welcome. You're not the Dave in our group, but you're another Dave. Welcome. We welcome all Daves. Keith Fernandez, welcome. Thank you. Okay, guys. So sorry, let's get into this. My apologies. I didn't say shout outs to everybody. Raki, all the way from London, UK. Amazing. I'm across London, Ontario, the other London. We're the Forex capital of the world, not London, UK, London, Ontario. Okay. Zitap from Chile, welcome. Thank you guys for visiting. Okay, so first thing is, guys, you see this zone? I went from the all-time high down to these bodies. I just want to cut it in half real quick because I want to know, did these wicks touch exactly 50% and look at where they are. So if I identify 50% zero, look at, wow, okay? So I'm just making it yellow as a point of interest, and look at it. Now I can see exactly, Friday traded right exactly in 50% of this zone, and it came back up on Monday. Again, they pushed it down, came back in Tuesday, they pushed it down. Look at the size of the wicks. These are big wicks. So gold is again building, again, another daily body that could try and fill these wicks and extend out of here, but it's got a lot of work to do. It's got like 3 days of big wicks to fill. So you know when you're climbing up a mountain and then you get pushed down and then you climb it up again, you're at the peak of the mountain, then there's someone waiting up there again and they push you down, you start getting exhausted, you start getting tired, you're not as motivated to get up there, and then look, you try again a third time, you come back up there and they push you down again. So that's how you got to kind of look at the buyers in this situation. And again, they're climbing up that mountain with some volume, but if they get pushed down again, then when it breaks this area, 4,300, right where the body's opened, that's that psychological level, then you can see maybe the sellers will take control and start pushing it down on this wick and getting it back down to 42.75, and we'll see if it holds. If it breaks, there's your fair value gap right in there, and I'll get the point of control of that candle, and I think it's right around 4,250, okay? So did you guys learn that analogy right there? Like going up a hill and someone's up there pushing you down. Think of that. And then when you look at it, it's got a lower high, and a lower high. So the sellers are there offering at lower points, continuing to push this down, okay? But it is still bullish, making its way back up there, okay? So just some other, a gentleman right now asked me, Ron, can you show me the point of control, how to figure it out? Let me show you right now. So number one, we don't just figure out any candle. Like we don't just do it on this candle. We don't do it just on this candle. There's got to be specific candles that you do it on, okay? Because then you'll just be doing it on every candle, and then that's too much. It's overkill. You want to do it on specific candles that are closing or above or below critical levels. So you see where it was driving to the all-time high, then it was barcoding, went up bullish, came back down bearish, went up bullish, and then this candle kind of was a statement candle, was a big bearish candle. It engulfed this blue one, it engulfed that one, and this one, and the majority of that one too. So one candle kind of negated all of this, and it closed below near the low. That is a candle that you should be basing this point of control off of, because that is showing me that that's got a lot of sellers, and if the market ever rotates back into that point of control, the sellers might be there protecting this position because it was a rather large move that they did, okay? And the same is for a bullish move. Like the second leg right here on the second bottom came up, there's a big bullish candle. It closed above all of this structure. That's a good candle to base a point of control off of and find it. And then you can see when it dipped back down, kind of hovered right in that point of control, held, and continued to drive back up, okay? So you will get better when you know exactly what you're looking for. And it just takes a little bit of practice. But if you join us on these calls every day, I do this on a daily basis with you guys. So you will just learn just by repetitions of joining me on these calls. So the way how I do it is with the Fibonacci tool. Grab your Fibonacci tool. It's already preset with these levels. And I do it from, my style is from the opening price to the closing price. And someone will ask me, Ron, why didn't you do it from the highest wick to the lowest wick or incorporate the wicks? Reason being, I don't look at the wicks as, I just look at it as a high and low, and I look at it as exhaustion or rejections. I look at the real body of the candle. That's why it's called a real body for a reason. That is showing me the real volume. So I want to know where it opened, and I want to know pinpoint where it closed, okay? And now that I have the volume, the last thing I do is very easy. There's the 0.5. It's not a Fibonacci ratio. The 0.5 is just a psychological midpoint. Anything cut in half, right? So right there is the psychological midpoint of this candle from the opening price to the closing price. Okay, so see how I mark it with a yellow line? That's now a daily point of interest right there. And I can see when it came right up on this day, Thursday, November 13, look, it came right at that 50%, and look at how it pushed down, and sellers are there. So I don't just look at the 50%, I look at the golden zone, golden ratio, golden pocket, hot pocket, chicken nugget, whatever you want to call it, you call it. But what it is this zone right here. Okay, it's that zone. It's the ratio above 382 and the ratio below 618. You'll know those numbers, you'll memorize these numbers because that's what it is. You might have your fib tool reversed, and you might see the 618 is up here and the 382. Regardless, it's these three numbers, 382, 0.5, 618. That is now called the golden zone. I call it the point of control, POC. Okay, that's the fancy word, POC, because whoever is in control of this volume, this is now the point of control. When you stretch it into the future, when the price eventually comes back in, it's like a magnet, it will eventually come back in here, and when it comes in here, we see if these sellers are holding the point of control down, and they're still there, and it shows that they're still there. See the move when it came right in there, pushed right back down. Okay, so what we do is we stretch this into the future, and look, it came in there again. So this was just recently, the end of November, came in there. Look, it traded, point of control, the spin top candle. Look at the volume, it's still closing below that yellow line, below the 50%. The buyers did break it out, but again, nothing happened up there. That was just the highest point, and then it closed back bearish down there as a bearish pin bar. Then the sellers next day continue to push it down. But you see how it's making higher lows, and it's building. So the depth of market, every time it pulls back, is still trending up. So it continued to trading here. Look, consolidating multiple days. Finally, we had FOMC last week, and you see all of this consolidation now started to open up. So this is where the buyers continued. And look, a daily candle Thursday, the day after FOMC, closed above. So what we do with that point of control, the same zone, follow me guys, because I'm gonna, if you want to learn how to do this, I'm showing you exactly how to do this. There's the first body that closed above. So you see my zone, nothing changes, only the color. Now it shows me that buyers are in control, right? They closed above the zone. So they now have momentary the point of control, right? The sellers lost their red box. They lost it. How did they lose it? By this day, the buyers closed above. It's like a sports game. The black team was winning, they were winning, but eventually they lost. So now the bullish team now has the lead, right? So they have control. They have control of the game. So what I do is stretch the zone into the future. And you see if it ever comes back and transact in here, the buyers could be there and we continue to come back up. Then when it comes up here, I can already anticipate a double top because there's already wicks in here. Maybe the one bottom, maybe if it comes back down, it comes in here, respects this, has that next leg coming right back up. Then we get to the double top. Double top, if they're protecting it, they'll be there, they'll protect it. They won't let gold get to the all-time high. And then the second leg traditionally has more volume and then it could continue to come back down. I can play it out visually. It's an M top coming down and then this is the neckline to break. And if it breaks below here and like look, I'll map it out coming up. If we come back down, we come in here, it comes back up, maybe in there. There's the lower high, like the M top, double top, coming down, it breaks through there. As soon as the black candle closes below there, same zone, I just make it red to show that the sellers are there now, and then that could start the sell of gold, right? But if it continues to hold that green box, it could continue to build. So right now, it's controlled by buyers, Okay, we got that. Now, how did I get that? I got all that information off of this bar right here. And then I can continue to do this, guys, but I think we just might be wasting time. Like right there, you see the body is held 50% of that body. There's body, body, body. There's a pattern you recognize. There's a double bottom. It came down. There's one bottom. There's the neckline. Second bottom. Second bottom traditionally has more volume. There's the breakout. This candle, I would definitely be finding the point of control. Can you guys do that for me? This candle right now on November 10, you guys do it right now, and then I will do it after, and let's see if we can do it together. You guys do it right now. Find me the point of control of this candle, this blue candle right now, Monday, November 10. Get your Fibonacci tool and you guys do it. And I'll give you guys 1 minute. That's more than enough time to do it. Okay, because if you want to learn how to scalp 1 minute candles, you better be able to do that in less than 1 minute. Okay, 30 more seconds. Let's go. How many of you guys have done it? Don't wait for me. Guys, believe me, these live streams will get so much better if you guys can do this before me. Okay, because then I can continue to break down things as they're happening live. Okay, did you guys do it? That's enough time. I'm going to sip one more sip of my eggnog with rum, and by the time I'm done this, you guys have better be done that. That's your homework assignment. I'm an easy teacher. Okay, are we done? Zoom, did you guys do it? Let's see if our levels match up. Okay, so this is a bullish candle. I'm obviously going to place it from the bottom. That's where a bullish candle opens and where it closes at the top. Why am I picking this candle? Because this is the candle that closed above this entire structure, right? So that's a good candle. There's my fib tool. Opening balance right there. Going up to the closing balance right there. I can see where the 0.5 is. It's right there. Yellow line. Around 4,058. You have 4,057. Okay. Give or take 10 points, 10 pips, not a big deal, okay? Just give or take that area. And then just try and round it up to a nice psychological area, 4,060, and we're all good, okay? So that's the 50%. Perfect. Now, can we find the point of control of that bullish candle? Very simple. Top is 4,071 and 50 cents. The bottom of the point of control is 4,044 and 50 cents. Right there, okay? So now we know the point of control, upper, lower, and the mid. Once we identify it, stretch it into the future, and then just kind of review. So then we can see, look, it came in there, it broke it. Did the black candle close below? No, came right back up. Green zone. This one opened blue, came up, back down, came right there. Look at where it closed. Guys, look at where it closed. The candle closed right at the bottom of the point of control. Okay, look at how accurate it is. You can't tell me this is just by chance. Okay, look at where the next body opened, right at the green zone. It was bearish, bearish, bearish. They took out that big bullish point of interest, this big bullish candle. That's the candle we're basing off of the point of control. So they took the liquidity out. They negated that candle. And look, it came right back up where it flipped, came back up and closed inside the green zone again. Now we can see that they swept the liquidity. Okay, we're learning what's going on. And then it came the next day. Look how bullish it was. It flied right through there. Where did it trade into? 50% of this big bearish candle. Why this one? Because this is the one that came out of the red zone. Right there, right off there. The next day, that was that big bleeding candle. And that one you could have cut in half right there. And you see when that big bullish candle came in, right there to the point of control of this bar, and then went right back down. Then we started to trade sideways. Look again, is any black candles closing below there? No, just making a higher low, another higher low, and then we took off again and took off and took off, okay? So stretch this zone into the future. And if you guys did that, you guys got similar numbers, perfect. You guys just learned how to figure out a point of control. You know how many years it took me to learn this, guys? I'm not lying to you. Maybe 3 to 5 years, learning all by myself, staring at candles every single day. And then just one day, I don't know what I did. I just looked at one candle stuck out to me and I just cut it in half. And then I started watching it, and over time it came right in there and started doing something at the halfway point. And I'm like, I got to learn more about this. Then I learned more about researching what the Fibonacci tool was, and then kind of put this together. That's why I said, guys, when that one gentleman asked me, Ron, are you going to worry about when the stock markets go 7 days a week? I said, I don't give a shit, because I'll just look for big body candles, whether they're Saturday night at 10 p.m. or they're Tuesday morning at 9:30 a.m. when Wall Street opens up. I don't give a shit. I do the same thing with Bitcoin. So this is how I can verify it with you guys. If we go to a Bitcoin chart and you show me a Saturday or Sunday, how the chart looks, I will look for a specific candle and I will show you what candle to identify, do the point of control, and watch it over the weekend and tell me what happens. And that's how you can literally know that this style works on weekends. And that's it. There's no debate, there's no argument, okay? But right now, look at how we're coming up, and it's making a little bit of a wave, okay? So wave 1, A or 1. This is wave 2, B. This is wave 3 or C. This is wave 4 or D, and we're on the 5th wave. Remember what we were saying, Justin, the other day? Like the fatality move, the final squeeze? They tried right there, they tried right there, and they tried right there. So is there one more move that's going to do, the fatal squeeze, get through there, create a new all-time high? Maybe they spike it, then it gets rejected, then we have a big downfall on gold coming in the new year. I don't know, right? It's not showing it currently. We came up there, got rejected, rejected, rejected. So this is following like an Elliott wave, 5-wave pattern. 1, 2, 3, 4, 5. And then now if we start moving back down here, do something like what I showed you, this could start the next wave selling back down, right? So we got to be careful up here now. And look at how gold is trading right near the all-time high, right near the end of the year, right? It's not just by chance that this is happening, right? Remember, markets are engineered, markets are created by a market maker. So it's not just by chance why this is happening. So whether you think it's some sort of conspiracy theory or this or that, I've seen this so many times play out that I don't even know what to say anymore, okay? Is there a visible trend that we can see on the daily? Okay, there is a daily uptrend right there, but we're approaching that double top at that all-time high, okay? Is there another trend we can place like above us as a resistance? Maybe we start it at this right there, connect points A to B and just extend it. And you see how now it could be like one of these rising wedges coming in. So I can see when it broke out impulsively, came back in, volume closed in the wedge. Next day again, impulse breakout, volume closed inside the wedge. Next day, breakout, spin top candle came down, closed inside the wedge. One more time, the 4th day today, we're coming back up strong. So if they reverse this, we could be looking for sells, but then we have to caution right here at 4,245 because we're at 50% of that point of control and we're right at the trend line. So will we have a trend break or trend continuation? That's why this block is very important on gold in the next few days and weeks, okay? So I'm just now going to base off of yesterday's trading volume going into today. So we had a bullish day to start. It was bullish, 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 came up. So yesterday's high is a point of interest. It's fresh in the market. It was yesterday's high. So I'm going to mark yesterday's high. 4,335, I'm going to place an alert at it. If gold comes up to this yellow line, I want to be alerted tonight because maybe we'll fill these wicks and break out further, or it gets rejected there, then it's coming down, okay? So it could definitely fill yesterday's wick and break for a new high. Then maximum range is right up to here to the yellow line. That's 50% of the all-time high zone. And then if it clears the upper half, we're at our all-time high, okay? So we're not too far away from it. And then it got rejected there, it came back down, sellers were in control, they broke the opening price, came all the way down, almost right into that green box, just above it, high or low, it's above that wick right there, and the buyers stepped right back in and pulled it right back up, and that's where we closed, right there. Virtually like where we opened, right around like 4,300, give or take a couple points here, right at that psychological. So our closing price is now our opening price today. When it opened, it was just briefly, it's got a tiny wick. Like, do I even have to place a purple line at the wick? You can see how it just opened up and it made the low of the day and it came right back up bullish. And this is where we are now. So we're trading right at the highest point. And just this candle can be deceiving because it just opened up like an hour and a half ago. Okay, it's only been open for 90 minutes. So it could be deceiving. But again, we're 30 minutes away from the futures market opening up. That's where the volume will start to get a little bit more volume in the markets coming in. Okay, so if it gets rejected and we come back down, we have to watch our opening price because our lowest point is right there. So if the candle flips bearish, then it could definitely fill all the way down. It's got this wick to fill. So I would look at the price tag, 4,285, place a yellow line there, just in case it comes down there and turns bearish. Maybe it stops right there and then goes back up. The reason being is then it's protecting yesterday's low and making a higher low. If it breaks that yellow line, then all we got to do is continue filling yesterday's wick and get down to 4,271 and 2,270. Then we are entering the green zone. And that's where the buyers could step back in. But if the selling pressure is coming down heavy, it could cut through that like butter and just continue breaking the trend line, break the zone, maybe continue pushing down. We already have one upper rejection. We have another upper rejection. We have another upper rejection, all with lower highs. So it's telling me there's a lot of sellers up there, right? But we're still coming up bullish one more time. Okay, so it is still strong. Now let's break our daily candle down into 4-hour increments. Okay, so you can see there was a double top on the 4 hours, right? This is what we were watching in our swing trading. Came up one top, there's the neckline, there's the second top. Traditionally has more volume. It did. It closed below the structure. It continued to push down, but it was held up at this big supporting area. That's why I told you guys I got an alert and I got in on a swing buy on this body coming up in New York. And I took it right up to, the next distance where I had it marked on that previous chart. And now it came up there again. Came back down and it's still holding right now where it could definitely come back up, and try and break out. But however, if it comes up and then they reject it again, then look, then it's a 4-hour kind of M with a lower shoulder coming back down, can break and drop even down further down, take out these lows. And you see what I mean? We're transacting right in the middle of that green box. And there's the daily trend line in that. So that's where, if there's no buyers there, that's where sellers could really overtake this point of control, okay? So that's what we got to watch on gold for the next few days. Even if we're scalping the markets, okay? We have to be watching that. So right now, this big 4-hour candle is representing just the opening day, so it is bullish. We saw in the daily candle. But from the end of the day, from 10 to 2 p.m., we could see gold was a little bit of bearish. Then closing the day from 2 to 6, it was bearish. So we closed, and look at where it closed, kind of right at this 50% point of control of this big body candle. So if you did the same thing, now on a 4-hour candle, you grab your fib tool, opening balance of this 4-hour candle, closing balance. Look at where we are. The purple low, the daily opening, it's all situated right at 0.5. And look at the psychological number, 4,300. You cannot tell me that this is just by chance. You can't. Okay, I've seen this on every single time frame. You name it. I've seen this same shit happen on daily candles, 4-hour candles, hourly candles, 30-minute candles, 15-minute candles, 5-minute candles, 3-minute candles, 90-second candles, 1-minute candles, 30-second candles, 15-second. It's just how mathematics operates, right? And it's also got that psychological number. Why? Because we know how auctions operate. That's where transactions, that's where it's efficient. I talked about the psychology of these psychological numbers. Guys, you got to start, learning what we're doing here. Because if you do, you could literally change your trading overnight, okay? Overnight. I'm not bullshitting you guys. I did all of the legwork for you guys. I did it all over all of these years. Okay, staring at candles for, I can't even tell you if I put in the hours and calculated how many hours I've in my entire lifetime staring at these things. Guys, I wouldn't be wasting your time. I'm telling you, that's why I know you guys want to get into scalping and it's so much fun to scalp the markets, but I'm telling you, if you learn this, you can scalp for the rest of your life. Like, you don't have to rely on us coming in on Tokyo. You can literally learn the art of scalping by doing this, okay? And it just takes practice. Someone's going to say, Ron, this is difficult, this is hard. It really is not that difficult, because once you learn this, you do it on every single time frame for the same candle that you're looking for, that structural candle, right? That's it. Guys, keep trading stupid simple. Keep it like that. Stop overcomplicating this shit. Some of you guys are telling me all of these terms. I'm like, what the fuck are you guys even saying? I had a one-on-one the other day with someone, and he kept telling me all of these these names of shit. And I'm like, bro, I'm so confused. I don't even know what you're saying right now. Like, I don't even know what he's showing me because he's telling me this name of this. I'm like, that's just a bullish candle. Why are you using all these stupid names? He's like, this is what I was taught. I'm like, unlearn all that shit right now. Right now, unlearn it and let's learn the real way of trading. Enough with this bullshit, guys. Enough, okay? If you don't even know what you're explaining, you probably don't even know what you're doing. Okay, so if you can't even explain your strategy to your mom or to your dad or to your brother, bring them in the room and you explain them your strategy and they will tell you right away. They either understand exactly what you're doing and it makes sense, or they're going to be so clueless and they're going to look at you and say, what the hell did you just even waste that time teaching me that? Your own family, if they're honest with you, they will tell you the honest and brutal truth. Okay. I'm telling you, I'm teaching my daughter this. She's 9 years old and she's a better analysis than me. I'm telling you. So if kids can learn this, you can learn this. Okay. Now we're on these 4-hour candles. So you see they're barcoding, bearish, bullish. We might continue come down bearish. It might go up bullish. Okay. We're in a range right now, right here. So it definitely can, I see sellers are there and buyers are there. So it could definitely continue to go up if buyers accumulate more, and it could come back down and sell back down to here if sellers accumulate more, or it's just going to be sideways. Okay. And this is the all-time high right here. We are not too far off of it. Let's go into the hour. So we were coming down with volume, 3 a.m. There's London, 4 a.m., 5 a.m. Here's where pre-New York starts. Here's 7 a.m. Here's 8 a.m. This is COMEX at 8:20. We had 6 red US folders at 8:30. Okay, the US dollar was pretty shitty due to that news. Unemployment went up. Job numbers were pretty shitty. Monthly wages went down month over month. Not a good look for the US dollar. That's why we saw a big bullish candle on gold. And it continued to 9 a.m. Then finally it fizzled out at 10 a.m. 10 a.m. momentum dropped. 10, 11. And look at the hourly candles. Just coming up, going back down. Coming back up, could potentially go back down. If you now look at the hourly candles, look at this pattern. Do we recognize this? Coming up, going down, coming back up. Are we going to come back down the next couple hours, or is it going to continue to break through here, close, maybe use this as support to take us back up and fill these bodies and those hourly wicks back at 10 a.m. this morning, okay? So right now, at our highest point of the day, they've already kind of pinned the hourly candle, but it's still holding good volume. This hourly candle is closing in 26 minutes, okay? So we still, if you're an hourly trader, you might have to sit and watch this candle for the next 26 minutes. You see how more laid back the trading is? If I was an hourly trader, now I'm watching this. You know what I'm watching? I'm pinpointing this. This is a point of interest on the hourly. Look at what I'm doing. If I was an hourly trader, I can be an hourly trader right now. How? Because I just gotta wait. I'm not doing anything different. If this was a 5-minute candle, I would be doing the same shit. I would be marking this body, and this is my 5-minute point of interest. I see when it broke, it was impulse, impulse, impulse. I don't see a body closing above here. So if this was a 5-minute candle closing in 2.5 minutes, I would be saying the same shit. Is this an impulse candle breaking out, or am I gonna wait for physical volume to prove to me that it can close above? If I do that, I gotta wait 2.5 minutes. This is an hourly candle with 25 minutes. So you gotta do the same thing. If you want to slow the time, now for 25 minutes, I can go right now. I can go to the washroom. I can go smoke a joint. I can go get some more eggnog and rum. I can go see what the kids are doing upstairs. I can come back. I know that this candle is going to close in 25 minutes. That's 8 p.m. Eastern. I can place an alert. All of these things. Do you guys understand how you can become your own floor trader in your own home, in your house? When you know exactly what you're looking for, you have the right mindset, you have the right psychology, you have the right discipline, and you're not greedy and you're not scared to trade in these markets. You are lethal. No one can stop you. You got armor. You know what I mean? You're bulletproof. No one can touch you. Only you can ruin yourself. That's it. No one else. You just got to be patient and look. Okay, so I see it come up there, back down, come up there, back down, come up there, back down. We're coming up again and it's going back down right now. So we got to follow this hourly volume. Okay, there was this nice big hourly bullish candle that opened 6. This is the opening hour. So this is a significant candle in itself. Why? Because this is the first hour where the daily candle opened. So whether it is a solid candle that we should be, it's just a candle you should always recognize, okay? Especially if you're an hourly trader. So what would I do with that? I would just cut this one in half. I don't need to find the point of control of this one because there's not too much volume. I just want to know where the halfway point is, because if it ever retraces back down there, I want to know, are these original buyers who opened this daily candle bullish, are they there protecting their position with a higher low? And I expect to see a wick at 4305. If I don't see the wick there, then it tells me that they're not there, and these sellers could continue to come down and break this opening balance and that low wick and start filling these no problem. And then you see gold start selling back down, right down to 4,285, and it's this body kind of cut in half right in there. That's a candle I would find the point of control of. How would I find that? Same shit. This hourly candle was Tuesday, 7 a.m. See what I mean? If it's a 24-hour around the clock, 7 days a week, I don't give a fuck. That's why when one guy asked me, he said, Ron, are you going to be affected? I said, no, why would I give a shit? See right here, I'm looking at this candle. This big blue candle closed above all of these bodies right there. I don't give a shit if this was Saturday night. It doesn't affect what I do, right? I just look for these big body candles that engulf everything. That's a pretty big bullish candle. It engulfed, look at how many hours behind it engulfed. 2, 4, 6, 8, 9 hours. One candle engulfed it all. That's a structural candle. Get your fib tool, opening balance, closing balance. 50%, this is where this is a daily point of interest. I put it here for a specific reason, but this is where I manipulate it myself. I carry it just a few pips up right there, right up to the 0.5. Now I've pinpoint the daily point of interest on this structural hourly candle. See guys how everything starts to make sense, and I figure out the point of control right there. Same shit I did on the hourly 4 hour. Now I do it on the hourly. Now I got it. If it comes in there, if I'm selling, so this is if I'm selling. If I'm selling and I know where the buyers are in the market, I'm selling, I'm in the money. How do I make money in the market? I'm a seller. I got to exchange the bag where the buyers are. I got to make a physical handshake, close my position. I got to buy it back. That's how I realize my profit selling. So when I know where the buyers are, this is where I don't get greedy. This is where I trade to a plan. This is where I'm not hoping and praying where it's going to go. If it comes in there, I do something. Why? Because I know that there's buyers there, right? That's the reason why I do this. And I have a rule where I at least close 80% in there, and then I leave 20% running. If the runner keeps going, fantastic. But I want to close the bulk of the trade in that block. Why? Because a lot of times it's come right down there, and I didn't do anything because I wanted more, came right in there, and then it came right back up. And I'm like, over time, I said, why didn't I just close, realize some profit, and I could have bought the way back up instead of just watch my profit just evaporate, and I could have bought it right back up, right? So that's why I'm a two-way trader. Someone asked me, Ron, do you just trade like a bullish market? Do you just buy? Do you sell a seller's market and just sell? I say, I don't give a fuck what the market's doing. Up, down, sideways, I don't give a shit. I'm buying, selling, doing this, doing that, all over the place. I scalp the markets, okay? So I don't have a bias, you know what I mean? I can scalp individual candles. I'm not looking for a trend on individual candles. I'm just looking to get 10, 15 points out of just the volume in a candle. If I see 1 minute, 2 minute, 3 minute candles are trading at 30, 40 pips per candle, and I'm only looking for 10, 15 pips, I'm just trying to move that volume just a little bit in my direction within that body of that candle. That's a scalper's mindset, okay? And not a lot of traders understand that, okay? And then what are these hourly candles doing right now? When they came down, they're going right back up. I see a double bottom, okay? If you don't see it, maybe you got to smoke some sativa. Right there, it came up. There's the neckline, double bottom. Double bottom has the leg with the power to break out of here. We have 20 more minutes, could break the daily high purple line and start advancing its way to I know what this trend line is. That's the daily trend line. And if it breaks, there's a body and a body, because then there's just rejections right above that. So I would be looking to maybe buy into 4325 right in there, okay? Because I got to expect that there could be sellers right there. But you see how I now identified a nice little point of control down there? I can also place an alert by adding an alert, right-clicking it. So if gold ever comes down here, I could be looking to buy out of there. I have an alert set. However long it takes to come down there, I'm waiting patiently. That's how the patient make money. You're waiting. Basically, 99% of trading is waiting, right? You're going to learn that once you gain more experience. You're going to say, holy shit, I don't even have to be at the charts anymore. And I'm like, wow, finally, you've learned how to trade, okay? You guys understand what I mean? A lot of traders are not glued to the charts, right? They're waiting. They're waiting. And the beauty of that with today's technology is adding a nice alert right in that zone. Is it going to be guaranteed to come in there and go out? No. But what guarantees me is I'm going to get an alert if it comes in there and I'm watching. Will it bounce out of there? Will it come back in? Will it be a double bottom? That could give me a clue to buy. What happens if it comes down there? It gives me the alert. And I get alerted. I don't just buy blind. I'm not one of those traders. I watch. Maybe the sellers will close it below there. Then that zone flips to a red zone. And when it comes in there, I'm selling where? To break those bodies and get down to that daily position. So on and so forth, right? But these are high impact trading blocks in the market. These are where efficient traders trade, okay? They're not trading this garbage right now. Efficient traders are trading this block. They're trading right here. Right? And you can see when I say trading, they're basically waiting, right? You're waiting. You know, when you go fishing, you throw your bobber and there's a worm. You got your bobber here and your worm is down there. All of a sudden, there might be a fish come and start to bite, right? If you ever go fishing, take the kids fishing, go for some sunfish, go for some largemouth bass in a pond around your house and watch. You got to throw your bobber out there with a worm and you got to literally wait. When the fish comes, they'll come and they'll start nibbling and they'll start biting. Maybe you'll hook it, maybe you'll catch it, maybe you'll lose it, but you'll get some bites. I guarantee you if you wait down here, there's going to be some bites you're going to get down there, okay? So that's a fishing analogy for any of our fishermen out there, okay? Now, still moving bullish, double bottom on the hourly pushing up, but we've had multi-rejections here at the daily high, but good volume coming up. Let's go into the 5 minutes and let's watch this starting to play out going into the futures market. So even the 5 minute candles, they have candles that you should be looking at, right? See this big bullish one? You know, same thing. Why am I looking at this big bullish one? Because this one at 615 was the one that closed above this neckline, right? The neckline is the white line. Look, when it came down, one bottom, came back up right there. You see how it came back down? There's the double bottom protecting the lowest point of the day. There's the second leg. Second leg traditionally has more volume. You can see it right there, literally broke out, made the new high. And look at where it closed above. And look at your pullbacks around 50% or the point of control and held up. If you bought, yes, there was a nice bullish flag that you had to survive. And then look at the breakout. You made your daily goal right there, okay? You could have literally just traded from white tape to white tape. And we measure the moves. We're carpenters. We're not just traders. We measure the moves. Grab your tape measure, your ruler, and you see from the white line to the white line is 60 pips right there. Just filled from the white line to the white line. But if you're holding, you see that it broke out, closed above, and continued. So you see when it hit the highest point of the day, the purple line, it came right back down. Look at what it's retesting. The hourly support of this candle. And why this candle, 50% of that one? This is a big bullish candle that closed above that wick, closed above that wick, closed above that wick, closed above that wick, and closed above this body, right? That's a structural candle. So look at how it's still respecting 50% of this 5 minute candle, okay? Now the market is pushing down where? At the daily high. So I can see it came up there, got rejected, rejected. Again, it came up strong. And look at it. Guys, that's how you know there's bullshit in the market. You know when I call bullshit? You guys know. You guys know when I call bullshit. I know Justin is paying attention. So he knows when I call a fuck you candle or I call bullshit. This candle, look, guys, it was originally bearish. It was black, 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 black. It came down right down to here, picked up all those pending orders, came back up very positive, flipped, filled the wick, and it popped right to the daily high, purple line. There's a small rejection. That's like 99% right at the highest point. And look at how the next candle opened. It opened bullish ignited, and look at it just filled that tiny, tiny little wick. I guarantee you, like I can't even get my tape measure to measure this. Like what is it? Look, from the close to that wick, it's 0.7, not even 1 pip. So you're telling me that this candle could not open with all of that bullish momentum, open and break that out for a new higher high? I call bullshit. So right away when I call bullshit, look at the next bearish candle. So that's market manipulation. You call it what you want. I don't care what you call it, but that's what that is. And look at the price tag. Exactly $4,314.99. Wow, they saved us 1 penny. That's like the Walmart pricing right there. Instead of paying $4,315, Why? Because that's a big psychological number. We'll give it to you for 99 cents. Oh shit. Savings, right? Black Friday deal. And look at it. Came right up there, equal highs, okay? So this is where I'm going to identify a red zone. A little bit above, like I can look at that body right there, coming across, then I can see a wick and a wick, red block up there, and it all started at this big bearish ignited candle at 11:15 a.m. this morning. And when it came back in there, back down, look, stretching it into the future right now, came right in there again and back down. So will we ever revisit this later tonight? 4,315 is our big resistance tonight. Even you can see it there, okay? So right now, the 5 minutes came up there and we're coming right back down. So we had a wick and a wick there. Are we going to get another break and it's going to come back up and go make its next leg back up? Then we maybe look to buy that leg coming up, but then we have to be careful because it could be a double top or it could advance out of there, okay? That's what we got to watch for. But right now, I got to wait for this candle to close the next 3 minutes because it might be an impulse candle that breaks, makes a new lower low. Will it close below there? This is, remember, that hourly point of interest. This is where this big bullish candle closed above on the 5 minutes and it's already retested it and holding. So, you know, when I'm looking like at a green zone right there on the 5 minutes, could be like a green zone right there. Sorry for all of these zones, but I just want you guys to, you know, understand what I'm looking at. So if the volume now wants to just kind of consolidate inside here, I'll let it consolidate. I know that eventually it's not just going to trade in here all night like it could for the next little bit, but then I know buyers are buying, sellers are selling, buyers are buying, sellers are selling, right? There's an accumulation phase. And then I know it will either, if buyers accumulate more, they will break it for a new daily high and maybe get a little higher. Or if sellers continue offering, then it could break this and drop right back down to, if I'm scalping, to these 5 minute bodies. If I'm holding a little longer, I want to see that hourly 4305, what I told you. Because if they're there, then they're going to protect the opening balance in the low and maybe bring it right back up. Then if it comes up here, it gets rejected, it comes back down, breaks that, then naturally the lowest point of the day is going to break and then gold is going to turn bearish for the day. So you guys understand how that works? Okay, so it's going to follow one of these pathways. Yes, there could be fake outs if we just go in, if we see a big black candle and we sell it and then it gets a wick and goes up, then that's, we went in on impulse. The only way you can get around that is you have an intuition of how it's coming down, lower highs, and you feeling it that it's going to break. Sometimes the intuition, if you follow the volume, you'll go with your gut and you might be right, but most of the time you might be incorrect on an impulse move. So the best way to do it is just wait for a body to close. And then you got to tell yourself, yes, you might miss out on an impulse candle, but at least you like, if you sold that, you're faked out, you're in drawdown. If you sold that, again, you know, like it just come up with a plan. My plan is I tell myself I'm either going to wait for the body to close and that's it. Once your mind is made up, that's it. It's made up. See that? If you got sucked in again on that black candle, came right in that green zone with higher low and now it's coming right back up. So you see it's barcoding. Bearish, bullish, and the buyers are bringing it right back up. So it's closing now in 45 seconds. Can it close above these 5 minute bodies? Let's take a look. Right? So you still see how it's still holding support in here. And we're 10 minutes away from the futures market open. So we're going to get some volatile moves coming in the next 10 minutes. Look how the market is building. And once in a while, just sit back and observe, guys. There's nothing wrong with that. Sometimes you got to just sit back, observe, watch what's happening, and you'll learn from that. Okay? Any questions, guys? Elite kids are pattern recognition masters. They are, because they play video games all day. Video games are testing your eyes, your hands, your patterns. I don't know. I used to play a lot of games too, and I do tend to play like Tetris and old school video games, which really tests your hand-eye coordination, looking at patterns, predicting the next move. The brain is constantly seeking patterns, wants to continue to learn. You reward yourself too in your mind if you get the right pattern, you know, it's like trading, guys. It's the same thing. You got to keep your brain active. That's why I mean education on a daily basis is learning, right? Some traders say, well, Ron, I'm not trading, I'm not learning. Yeah, well, if you're observing the charts, you're learning. We just learned right now. That this didn't break. If we went in an impulse sell, we're in drawdown right now. So we just learned, wait for a body to close, right? I learned something. I don't know about you, but I learned something there. Nalantu, sorry for asking. No, don't want to apologize. But how did I get the 4314 resistance? Oh, it's right here, like the daily high. It just came right up there and just went right back down. And you see, then I look backwards. Earlier today at 245, 250, right prior to power hour, you see gold came up there and pushed back down. And in this big significant candle that took the market down, there's the M pattern, came up this morning, came back down. There's the lower high. There's where it pushed. And you see how it opened ignited bearish at 11:15 and just started to drop and then came up to 50% and continued the leg down. So kind of based it off of the opening balance of that candle. And we're at our highest point of the day. And I see it's already had rejections and I see it's got rejections there. So that's our resistance, that 4314.15. Do we have PDFs to all this? We have everything on our website right over here. You come to our website, there's everything explained. Come to education. Here's courses on Forex fundamentals. Here's right over here, candlestick courses. So everything we learn about candlesticks, this is price action is king. This is like your Bible, the candlestick Bible right here. How to identify support and resistance in chart patterns. You come in here. These are all of what you're going to learn. Support and resistance, bullish uptrend, bearish downtrends, bullish flag patterns, ascending triangles, symmetricals, double bottoms, W's, rising wedges, what I just talked about. Gold was on a rising wedge approaching a double top on the daily. So that's why we really got to watch it. And these are your videos accompanied with explanations. So everything is in here, guys. And then when you take it, there's webinars, there's boot camps, there's all kinds of stuff. These are long. Like these boot camps are 3 to 5 days of 2, 3, 4 hours each day. Each one of these webinars, there's over 120. From the first 10 are for beginners. The next 11 to 30 are more for advanced trading, and then, intermediate, then it gets to advanced, the next 30 to 120 plus. This is where you're really learning real stuff about trading, what we're talking about here. We're talking about zone to zone trading, wick analysis, scalping, all of these things, like what's the importance of session highs and lows, and all of these things. So basically any question you have regarding trading, I'm sure it's in here, okay? So sorry, let's just get back to these charts. So we're making our way back up now, right prior to the futures market opening up. So are we going to get a breakout? Are we going to get a fake out? Are we going to get a candle closing? Are we going to get a rejection? What are we going to get up here, okay? I sound more like I've taken amphetamine than weed. No, guys, I am just a high energy person. If you get around me, I'll be the life of the party. I don't stop, okay? I take a lot of caffeine throughout the day. I drink a lot of coffee. I'm just one of those people. I just got natural energy. It runs through me. If you're having a shitty day, I will pump you up, okay? Anytime you're tired, you come message me, and I'll get you kind of going again. Okay, you can feed off my energy. And the secret is eggnog and rum. That's the secret for everybody. Is anybody in a trade right now? Guys, give us a like, okay? Because there was some solid education tonight. Whether you think we didn't talk, we talked some nuggets, There was some big nuggets today. Some of you guys are sleeping on these calls and you missed out, because I know the people that are focused on these calls, I gave away a lot that could change your trading overnight if you understand what I was talking about, okay? It's up to you guys. Like I can do this. You know what I mean? Dave can do this. Most of our snipers in our group can do this. That's a fact. I'm not making this up. Okay. Whether you believe me or not, it's not a testament to me or Dave. You can look at our snipers in the group. They are very, very consistent. They're very profitable, and they're doing a very consistent job over years now in our group. So this is a testament to them, not on myself or Dave. So, and they're learning these concepts of trading. These concepts don't have a name. Everyone's like, Ron, what's the name of this strategy? I'm like, I don't, I don't know. This is, if you ever go back to the 70s and the 80s and the 90s floor traders, it's called reading the tape. Okay, I know it might sound really ancient to a lot of you young traders out there, but this is basically reading the tape, the tail of the tape. Okay, and this is literally what we're doing. We're reading the tape, tape measure, measuring the distance. So you see, I'm not looking to hit a grand slam. I'm not looking to make, like when I'm scalping, I'm not looking, someone asked me, Ron, is gold going to 5,000? I don't know. I don't even know if it's, I just want to see if it will break 4,315 and get to today's daily high. How the hell do I know if it's going to 5,000? You understand? Like that you're on a monthly, on an investment time chart. I'm watching 5 minutes. I just want to see if it will fill up to this previous high. That's basically it. You know what I mean? And will it break out any further? What I'm doing is then I'm looking, okay, then it will fill that wick. Then it's got this big bearish candle. Again, cut it in half because that candle has to have some sort of point of control that has not been tapped into. So right there, if I get in a buy, I'm going to be doing something at that red line. Why? Because it's a point of control of that big bearish body. So I have to know that there's sellers pending in there right now as I'm speaking. Right? So then I take my ruler, and if I'm going to buy above this and I get a breakout and a retest and I'm buying and it comes up there, I know it's approximately almost 30 pips. Then at least I can maybe manage my stop loss. I can take my stop while I'm in 30 pips in profit and start reducing my risk by in half and maybe get it to a break even. And at least now then I have no capital at risk and I'm up 30 pips in profit. And now I just got to manage my profit. And I know that it could come up there and come all the way right back down and tap me out for a break even, but that's fine. I'm okay with that because if I don't have a break even, what if it breaks down and the bears are in control? Then it starts coming after my stop loss. Then that's a critical mistake on my behalf because I could have just escaped with a break even, would have controlled my emotions. I probably would have been coherent on taking my next trade. I wouldn't be pissed off. I'd just be like, okay, it is what it is. That's how the market is moving right now. But if I didn't have a break even and it came and hit my stop loss, now it's like a detrimental trade where you were 30 pips in profit. Now you just got clocked out 30 pips. That's like a 60 pip swing. So that right there can affect traders. And then they can start trading reckless after that. They can start revenge trading. They can start getting pissed off. Then they're not disciplined anymore. They're not being patient. They're not waiting. They're mad at the markets. And there's no one to be mad about is just yourself. You know, I know it sucks hearing that. I used to blame the markets myself. I used to say, oh, the markets are rigged, this, that, you know. I know the markets are manipulated, but there's not like someone is watching you at your home when you're taking buys and sells and just, no, it's just trading is you versus you. That's it. You know, you got to overcome this battle with yourself every single day. Some days you wake up and you're scared to trade. That's in your mind. You got to overcome that. Some days you wake up and you're a greedy bastard and you want to trade the markets and you want to make enough to get a Lamborghini at the end of the night. That's you. That's in your mind. Okay. You know, it's a battle between you and yourself in trading. Once you learn that, then you'll learn what real trading is. Okay. Lorraine, have a great night. Yeah, it's bedtime. I know it might be late for you. Okay, and we got 1 minute to go. And look at now. So the market came up. Did it tap into there? No. So we're still just trading inside here. Here's the futures market open up. Okay, so it was black. Now it's opening up bullish ignited. Okay, we're right inside here. So again, this is not a good area to be entertaining trades right now. Okay, so let's see. Well, the futures volume. Okay, so it broke out. Okay, so this is a big bullish body. This is the first 15 seconds, okay? We still have 4 minutes and 40 seconds to go. Yes, it could continue breakout, but that's, if you want to buy this, test it out, right? If you have a rule, you're telling yourself, I'm waiting for this candle to close. Unfortunately, you got to watch this for the next 4.5 minutes. Believe me, it's so difficult to do this because this candle is full of volume and it could definitely break out of there, but it could just get a wick and start rejecting back down. So you have to make that rule prior to even this candle opening, or determine it while it's still open. Just manage your risk. I'm waiting for this full body candle to close. Even if it's a big blue bullish candle, 30, 40, 50 pips, that's fine. I'm still gonna cut it in half, figure out the point of control, and wait for a pullback to come back into it. Because I'm not the only one. We're not the only ones. If we didn't take this buy, we're not the only ones that, didn't buy this, okay? So you got to understand, there's traders that are waiting for this body to close. You just have to make up your mind. That's it. And you got to go with it. If you buy it with impulse, you live and die, right? You got to go with your move, right? So now I see it broke through there. Okay. It impulsively broke out, had a lot of big blue volume, but they've rejected it hard, but it's still holding its opening balance. Remember, it opened very bullish and ignited. So it's a bigger inverted hammer candle. Why? Because there's more volume. There's more range in this candle because it's the opening of the futures market. So there's a lot of volume coming in the market right now. And look, now it's right at the opening price. So look at, they flipped that. So if you bought that on impulse and you didn't do anything, which I don't think the majority of traders on impulse did anything, they're in drawdown now, okay? How much drawdown? You can measure it. Let's say they bought at this high point when it came down, they were experienced 30 pips of drawdown down there. Maybe they're still holding and they're still in drawdown, but it's, right? I think more stop losses are down here. They would be below this, this supporting area, okay? So have we tapped into, grab this liquidity down here yet? No, the volume is still, concentrating in between this red zone and green zone. We do have one wick that broke out of here and spiked some liquidity. So far, it hasn't closed yet. We still have the halfway point. So it could definitely come back up blue and close above there. Then I'll get rid of that and I'll flip this red zone green and we'll see if we can build off of it to continue drive. But that's a massive rejection, okay? So that was the second top with a liquidity grab up there. Now we got the shooting star candle coming down and we'll see if the sellers now can finish off the job by creating some new lows and maybe seeing, can they break it down below this green zone or get down here? Okay, that's a nasty rejection. So this is where I pat myself on the back and say, good job. I didn't take that impulse breakout because if I did, I would be in severe drawdown right now or even eventually stopped out, right? So that's where, and remember, that was the first 30 seconds. So I told you, you got to have discipline. You got to tell yourself. And you see, if you told yourself you're waiting on that, you just basically saved yourself drawdown. And sometimes it happens like this. Sometimes it doesn't. I was prepared if this was going to be a big blue candle closing up here. I told you I'm going to wait for a close. I would have cut it in half and I would have figured out the point of control. But now I see it came right back down to the green box. Did it break this lows? No. So it's coming right back up with strong buying volume. Okay. And now it's closing in 60 seconds. So you can see the range is really large compared to all of our other bodies. So the range is like kind of maybe 2 to 3 times the size of these previous candles. And then if the volume continues to close inside here, then we know it broke out, made a bullish move, broke out, didn't close above. It came down here. Sellers were in control, but came right back up, and we'll figure out where this body closes. Sergio, you're in a small buy with stop loss under the 1H double bottom. Nice. You got a lot of breathing room you're giving it. Yep. Okay, so we got to follow through. We got to watch this candle right to the closing price in the next 12 seconds. So let's see where it will close. If it closes again above with that volume above there, next candle could be still bullish and continue to break out of here. It could pull back a little bit. Okay, that's a good close. Look at it, closed above. Okay, so get ready. It's already retested and filled. Okay, a little bit. Will it fill that wick? Will it come down? I look for one more time. Will this body? No. So I kind of missed that breakout. Okay, so first thing is, did it close above the red zone? Yes. So let's go through the motions. Closed above. So if it pulls back, green. Can I just kind of maybe cut that green body, the blue body in half, just in case it comes down there? Okay, so you see it broke out and now it's coming down. So if I want to buy now, at least maybe I'm getting back a retest at this location. Okay, so I'm going to go in a buy now and to see if this thing can continue to hold to get up to that red line that I have marked, and now see maybe if it can continue to build off of this green zone. So my stop loss, I can go to the next green zone and really open it up, but I'm just going to be right there. I'm just going to be right below the opening balance of this candle. Okay, so that's where I'm placing my stop loss, just right below the opening balance of this big bullish candle. Because if the sellers come all the way down there and close it below there, they might have that official leg to break it down, and I no longer want to be in that trade. So now I got to see if this green zone will start to now turn into some pending buy orders in here. Will it start to get wicks? Will it start to engage in some trading inside here and maybe continue to build this zone, close with volume above to continue to break out and see if I get this bullish move? Okay, so I'm in a buy. It's in some drawdown right now. I waited for the full body candle to close. It did break out. I waited for the pullback. The pullback came. I bought at the opening balance of this candle, but it's showing me that sellers are significant right now. So I gotta let the trade play out, and my final stop loss is still inside this consolidated range. Yes, it could basically come down, stop me out, and go back up, but that's as much as I'm giving it. If the buyers are not like at the point of control right here by this red line where they're at, and they can't hold it, and then they can't protect this opening balance, then all of that futures market volume is gone. So I no longer want to be in this trade any longer, okay? And then I can see then it's still trading sideways. It's going up bullish, going back down bearish. It could continue to build. I'll verbally let you guys know as soon as I get stopped out. I'm still holding this, still in it. There is a wick. There's a good return, but this is just representing half of the candle, right? We still have another 2.5 minutes to go. So there was a good rejection down there. It's showing us that there is solid buying down there, just right above the opening balance. That's why I told you I placed a really, really tight stop loss. So the candle is still showing strength. It's already created a higher low. So now we just got to get, again, closing volume to close above this green zone and continue to build at today's daily high. But you can see there's a lot of sellers still here. Now they're pushing it all the way back down that wick. If they come all the way down, they'll create a new lower low, and then they're attempting to come to the opening balance. And then you'll see I could definitely get stopped out on the next push down, but there's buyers bringing it right back up. Okay, so it's kind of like a tug of war. It's one of those candles. It's a tug of war, right? We've got buyers buying, sellers selling, buyers buying, sellers selling. Officially, when the candle closes, that will determine who has control. So the sellers right now have the control, and I could definitely get stopped out. So I really got to watch this down in here. Just adding the daily bar, okay? So you can see I have a rather tight stop loss compared to the entire daily bar, okay? So I'm just kind of want to see the futures volume. Is it strong, or is this going to just be weak volume? And then the sellers could definitely continue to sell it down. It's trading at this 4314, 4315 area. I'll verbally let you guys know as soon as I get tapped out. There's a wick down there, still holding. Okay, so we got one more minute to go on the close. So this is like a bearish spin top candle. You can clearly see the indecision in this candle when it opened up bullish, then it was bearish, then it came back up, then it went back down, then it came back up, then it went back down, and it went back up. So this candle has a lot of range. No one convincingly has the control yet until the candle finally closes in the next 30 seconds. So now it's advanced back into a bullish pin bar. So this could close near the high, and we could advance with another bullish ignited candle breaking right through here. And we know we picked up quite a bit of pending orders down there, right? Okay, so here's the closing price. It's a perfect return candle. Okay, so we got the higher highs, we got higher lows, nice liquidity graph, like not liquidity, we didn't break any lows, but we got a lot of pending orders down there. But let's see the final closing price. Okay, it turned into a bullish pin bar. Okay, so we did close above the green zone. We are still technically above today's daily high, so it is still acting as support. It could become bearish and come back down and retest this location. Now we see if the block can strengthen. However, if we get a higher low and we just start breaking out without coming into our green box again, then maybe we can diverge away, get up to this red line, maybe break out a little further without even pulling back. But you see, when it just flashed blue, you see how it didn't advance to fill that wick? So this candle has not done its job. It failed to do its job. This candle has a job to do. Just like you and I wake up every morning, we have a job to do. This candle has a job to do. Its job is to continue to break that high and create a new high. So the first attempt, it failed, it came back down, but it picked up some more pending buyers, picked up some more volume. So now it's still got its job to do, is to continue to break that wick. You see, again, second time it failed. So they've smacked it down one more time. Now it's continuing to build at its opening price just above it. And we'll see if it gathers enough volume to continue to fill the wick and complete its job in these 5 minutes, what its job is to do. Each candle has a job to do. In order to keep this trend going up with these single bars, it needs to create the new higher high. Now it's trying for a third attempt to break this high again. Okay, and that's why I have marked this red line, because that's 50% of that big bearish candle right to the left of us. This was earlier this morning at 11:05. Okay, so we're coming right back up. Can it break that? This is the fourth or fifth attempt. Okay, I don't want to see equal highs. I want to see a new higher high. So we got our new higher high. Okay, so can it continue to advance through here? Can this be a nice strong bullish candle that can close above the red line? Because then maybe I can chop this one in half. And if it pulls back, maybe we're gathering perfect, nice body candle. Okay. Is it time to reduce risk right now? Okay, that's about 25 pips up to there. Okay, let's watch and see the close. We got 3 minutes. Okay, so that's 25 pips. If you want, you can start to reduce risk. Reducing risk is, you see where I was below that opening balance candle? Me reducing my risk now, I'm putting myself right below that red line, below that green box. So you see, I've just reduced my risk by 15 pips. So that's good. That's reducing risk while you're in profit, okay? If we can continue to move up to there, that's 30 pips. Up to that yellow line, that's the daily trend line. Okay, so that's a beautiful candle, guys. That's 30 plus pips. Beautiful. Closing in 2.5 minutes. Excellent. Man, I think it was this good grab we had. And you see where I placed my stop right below that body? That's trusting a certain candle. You know what I mean? That's why when someone said, Ron, if trading is 24 hours, is it going to affect you? Fuck no. It's not going to affect me, because this could be an 8 p.m. Saturday night candle, right? It's all mathematics, guys. It's above, oh, sorry, I don't even have the EMAs on. Sorry, Justin. It's above the 9 EMA. Our 9 EMA is right back at our daily purple line. So if we get a pullback all the way down there, then that's where it could pull back into that green zone. The 200 EMA, 200 EMA, our purple line is all the way here at our hourly double bottom location, okay? So we have 90 seconds to go. You see it pushed up approximately 40 pips. And getting rejected, okay, because, you know, we're driving into, you know, we still have a lot of selling pressure. There's a lot of selling pressure earlier today. We're retracing back into that. So we still have to recognize that there's sellers there, and that's a nasty rejection, okay? And if I didn't do anything at 40 pips, this trade could come all the way back down to where I entered, and I could go into drawdown, but I reduced my risk, and then I got to take a loss. And then I got to go back to the drawing board and say, why didn't I do anything at 40 pips in profit? Why didn't I at least maybe go to a break even? Why didn't I scale out 80%? I think because I was talking too much. Sometimes I talk too much and I forget what I got to be doing. Because when I'm trading by myself, I'm more robotic because I'm not explaining concepts. Okay, so here's the close now in 40 seconds, last 30 seconds. So can the buyers reclaim that? If not, that's going to be ongoing resistance. So you see we broke through it, created that nice higher high, but that's a nasty rejection, okay? And then we got to watch going into close. Will the buyers be able to close it back above that red line? Will they reclaim that? Can they build that as a support line? If it closes below, that's still resistance. Then sellers are technically in control. And then that's a rather significant larger wick. Remember, if it's a small wick, when it fills, it can go higher. That's, again, it's got an uphill battle to fill that wick. That wick is pretty exhausted, okay? So it's got the wick, close below, okay? See how now that red line is acting as resistance. If I was just coming right now to cut that candle in half, that's the cutting point right there, okay? So you can see it might want to come back and retest the opening balance of that candle, or maybe a higher low, or it's going to come all the way back and test our green block that has not been tested yet, right? Guys, give us a like if you can on YouTube. Subscribe to the channel. We do daily live trading with you guys. And join the free Telegram channel. It's pinned at the top of the YouTube channel for you guys. And I moved my stop loss just below the green zone here. So I could definitely get stopped out, but remember my original stop loss was down there. So I reduced my risk. You know, I didn't do anything at the 40 pips of profit. That was maybe my fault, but shit happens and we got to continue to play out the bodies and see what's going on. So it came down right to that opening balance. It held, it's got the higher low. So are we going to flip this candle and turn it back up bullish and get it closing back above here? And maybe we can make our way back up filling this wick and continue to drive to our daily point of interest. So if it gives me maybe another attempt to get up there, then maybe I'll start to take some profit out. But regardless is my psychology. I've reduced my stop loss. So that helps me stay in this trade longer, is that I've reduced my original risk opening the trade. Now we have a nice big bullish hammer candle, but remember what I said, that's a large wick to fill. So it's got that uphill battle, which it could do with buying pressure on our daily candle being strong, and we continue to squeeze some sellers, but it could just come up, get another lower high, and then go back down. That's why then we got to follow the closing volume in the next 3 minutes. So this is a beautiful return candle as well. I would have liked if the wick wasn't as large, but buyers are still there asking to trade up here. And we got about another 12 minutes, and then we're going into 8:30, and then we're getting a new 30-minute candle opening up. But you see, we have not came and re-entered this green zone yet. So we're kind of diverging away from it, but we have not made any new higher highs, okay? So that's, again, it came up there. That's what I mean. These big wicks are not easy to fill. So we came all the way up there. It was looking beautiful, nice big beautiful candle. Then they rejected it again with that lower high. So you can tell, guys, you got to do some wick analysis too in your trading as well. And then we got a spin top with some indecision. Remember, it opened, was bullish, then it came all the way down bearish, then it flipped all the way up bullish, then it came back down, right? And we're just trading virtually at the opening balance where this candle opened with a range. So now we are going into 90 seconds going into the close. Sellers could continue to push it down, close with authority, engulf that candle. Next bar would be black, retesting this location. If the buyers can flip it back out of here and close it blue above this red line, we can build maybe off of this as support and to continue to fill these wicks and get with a new high. It could just close right where it is right now. Then we got an inside bar consolidating. Then we're going to get some sideways trading action. And then we're maybe going to flag for a little bit. And that's how trading works in a nutshell, guys. So hopefully you guys learned a lot. In like first 30 minutes was just going over the news, but this last 90 minutes, hopefully you've learned something. Did any of you guys do anything to manage any risk? Did any of you guys, take out some partials? It's okay if you didn't, but I'm just asking. I'd like to know if you guys did anything. You don't always got to wait for me to tell you guys what to do. Took some partials, Mike. Good. And then this trade could come back down and stop me out. But then I got to go look back at it. And yes, I'll realize about 15 pips of stop loss. But I originally had it down there, below there. So I reduced it. Then I just got to go back to myself and say, Ron, when you were up 40 pips, why did you not take anything out of the market? Okay. And then you're going to have to go back, review that, and come up with the conclusion why I didn't do that. I don't know why. I don't know why. And that was a big bearish candle. You see it closed below the red line, closed below 50% of that blue candle, short wick. Now it opened bearish ignited. So it's continuing with bearish momentum coming all the way down. So let's see what will happen when we officially tap into this green zone. Okay. And this is the first time it's being retested since this candle 5 minutes after the futures market. So there's your 9 EMA, and you can see we're cutting right through it, guys. That's right at my stop loss, and I'll let you guys know as soon as I get tapped out. It's right at my stop loss. I never got tapped out. There's a large wick there. I'm right below that wick, and there's a solid return. I'm still in this. I don't know how, but I was right. I was a tick below that wick. Holy shit. This might be like one meme, you know, where you're a tick away from a stop loss and then all of a sudden it shoots right into profit again. But they didn't get me there. Okay. So you can see how safe I'm placing my stop loss originally right there. So you can see if you give it a little more room to breathe than I do, then you can see. But I'm on here helping mentor. I want to manage risk. You know, I don't want to just go with a huge stop loss and we encounter a massive drawdown. So you can see I'm being very, very, very conservative with my stop loss. And I just got saved by that candle. Now it's coming right back up. Are we going to close here? Are we barcoding? Blue, black, blue, and maybe have enough movement to fill these wicks? Or is this just going to be a nasty candle? But regardless, you see the results of the first return inside that zone. And now when we came up there, you can tell how much offers there is. They're continuing, like they slam that big blue candle down, and now it's coming back down black. So this is where now there could be some consolidation. Like if it stays like right inside here, that could be where it's neutralized. So again, I'll verbally let you guys know, but my stop is just right below that wick, and I'm still in this. So you can see the volatility has substantially increased now. Okay, and now we got less than 2 minutes to go into the closing price. So is it still above this green zone? Technically it still is, but when the body closes, it might close below there. And that's why I no longer want to be in this, because then I know it's closing below there. This is a red zone. Then it might have enough sellers to bring it all the way back down there. And I know it could bounce off there and come back up, but I don't want to realize that drawdown. I don't need to, right? If it's not holding this zone, then I no longer want to be in this trade any longer. Oh, nice, Aogi. You took out 80% at 40 pips. Good. I wish I did that. You know, woulda, shoulda, coulda. Now you can see I'm probably going to get tapped out here. Okay, there's still a wick there. And we're closing in 60 seconds. So there is a lot of selling pressure right there. What? Oh my goodness. I'm still live in this. They didn't get me. Now it's coming down. Still got a wick. Oh my goodness. There's still a wick there. Still a wick. Unbelievable. Unbelievable, the war that's going on down there at that wick. Okay, now they got me. Okay, so I got stopped out on that move. So, man, so I gave away profit but reduced my stop loss. I encountered 15 pips of stop loss, which is nothing trading gold. When you look at it, 15 pips is fuck all. When you got 30 to 50 pip 5-minute candles. So it happens. When I look back at this is simple. Why did I not take out 80% up there? That's it. There's no other explanation. Okay. So now we know, now you've learned the importance of those wicks, like how strong they are when you have upper wicks. So that was a strong bullish candle that came up. But remember, whenever it got right in this zone, those sellers are there. So now we're going into 8:30. So we got a clear move coming up. We got a clear move coming down. But you see now how the bodies start to open up. So we're getting a lot more volume in the markets. You know, it's really opened up kind of from these type of candles that we're trading. So now at least we can still see what's going on. Came up, maybe possibly coming back down. Where will it find its neckline? Will it get another move coming back up? Will it break out? Will it be higher than those wicks and continue driving today? Or is this where it's going to go back down, you know, and then we got to watch down in here at this block. And we could definitely, if you want to look to continue to buy, it would be better to buy inside here, right? At your hourly support. But if the sellers break this, that's where it could continue to drive down. Man, crazy volume, guys. And this is how, you know, if we're going to be trading those days during the holidays, you know, where this is the type of price action you might be trading with this type of candle wicks, with these type of aggressive moves. You know, it's with these whipsaw action. It's up to you if you want to trade those days. Spreads, if you trade Forex, might be larger than usual. Slippage. So I would recommend, guys, if you take a day off on those days. Justin, it's been a tough trading these past few days. It has. It's because there's been a lot of news entering the markets all at once now, right at the end of the year, because we had that government shutdown. So they're just throwing high impact news back to back. So it's guys, you know, when you're driving a car, okay, I use these stupid analogies, but if you're driving manual and you're in 7th gear, start slowing it down, get it down to 6th gear, get it down to 5th gear, 4th gear, 3rd gear, and start cruising. Okay, as we engage near the end of the year, some of you guys are now, you know, hitting the nitrous oxide button, and you guys are driving in these markets and trading these markets in 6th, 7th gear, and it's too much, guys. This is the time where we should be slowing down, okay? We should be reducing our trading. If you've had, look back, if you've had so far a good month, maybe you had a good stretch near the end of the year, you had, you know, you're in profit this year, you're doing good. I wouldn't continue to accelerate and go trade hard. This is where I would say, guys, slow it down. Start downshifting. Slow it down now. Then start managing your risk properly, because we could see some crazy candles. Just like I'm watching this blue candle come right back up, okay? It's nasty, but this is the name of the game. If you reduce your risk and you reduce your stop loss, you can get stopped out and you can watch the trade run right into profit. So, but what I do is I learn from this. So you see the original red line where I originally had my stop loss, it is still holding that 8 p.m. bullish body right there, that military time 2000. So you still see how it's still holding it. So I'm still learning whether I'm still in the trade or not. Now I'm still seeing that this 8 p.m. candle, look how strong it is, and it's still respecting the opening balance, has not broke on that candle. So I told you guys I was going to a really tight stop loss, but if you still kind of kept your stop loss open, then you got a good return, but you got good blue volume. But again, we got to watch where it closes, because it just made a lower high, and it's still below this red line. But this is what could be the true neckline. And you see the neckline is concentrated at this green zone and the purple line. The purple line was the previous high before futures, and now it's turning into support. And the volume is kind of right at this 9 EMA, right in this location right here. So you can see that's where the neckline is developing right now. It sucks that I got stopped out, but it is what it is. That's how trading works, guys. I'm just happy that I controlled my risk. That's it. I got to look at the positives from taking a loss. That's how I have a healthy mindset in trading, right? Some traders got to learn that, right? I take the positives even when I take a loss. Is there something that I did good in that trade? I know I fucked up. I didn't take out my profit at 40 pips. Okay, that was a fatal flaw, mistake on my part. Normally, I'm very robotic at that. But sometimes when I'm teaching live, I want trades to obviously run more, because if I just trade robotic, someone tells me, Ron, why did you get out? So then I got to continue go through that spiel and explain that. But it's my fault, okay? My fault. No one else's. My fault. I screwed up there, but I got to look at the positives, what I did. I reduced my risk. I take that as a positive. Yes, I got stopped out and it's running, but what if that didn't? What if that broke? What if that bearish candle closed below there and then the black candle is trading all the way down here, right? So that's what I'm kind of congratulating myself on. I know it seems stupid because it came right back in profit, but if this candle was black and it closed below that opening balance, that's it. The futures market lost all that opening volume, and it could have been sellers breaking this down, and all of a sudden it's down there. And if I still was in that trade, then I'm in massive, severe drawdown where I bought this, when it was coming up here, and that could turn into a 70, 80, 100 pip stop loss, right? So, I don't look at those like what would have happened, what should have happened. I trade in real time. Okay. So I got to make real time decisions. Sometimes they backfire on me. Sometimes they work out in my direction, right? That's all we can do as traders, and stop being so hard on yourself. If you followed your rules, then congratulate yourself. I didn't follow my rules there, because my trading rules are when it starts breaking out, remember, I placed this red line at that location for a specific reason, and I also got my breakout. I failed right there. So that's where, and when I'm journaling this trade, I'm writing down my fatal flaw on that trade was on this candle. I write down the time, 8:10, this bullish candle. That was where I should have secured 80% and left 20% running with a break even. Then it would have came down and hit my break even runner for 20%. At least I would have secured 80% at my 40 pips. Okay. I lose money, but I gain more students and subscribers. I don't, guys, I told you this. YouTube pays us fuck all. I don't gain anything from you guys subscribing. Okay. I don't, honestly. You guys gain from subscribing, not me. That's why we do this for free for the past 6 years, every single day. I don't gain a penny off of YouTube. I don't gain nothing from you guys subscribing. When I tell you guys to subscribe here, this is for you guys, because I know what we're offering here. I know we're giving real live education and knowledge. If you don't want this, you will not see me here anymore. With stupid comments like that, that's all I need to trigger me, and I will not be here. And I'll prove to you guys that I don't need to be here. And you'll never see Ron on Stock Sniper Trading on YouTube live again, ever, okay? So that will prove to you that I don't need this. I do this out of my heart for you guys. And if you don't appreciate it, I don't give a shit, right? It's up to you. Anyways, guys, that's it. I got to finish at 8:30. I got to help my son. He's got some work to do. And I will see you guys tomorrow. So just take a look at our schedule for the rest of this week, what we got going on. So tomorrow's Wednesday. Dave is in the New York sessions with the snipers. We got trade ideas all week. We'll continue with these 6:30, 8:30 calls tomorrow and Thursday, and then we'll wrap it up for a week. And then on Friday, guys, I'll be releasing the mindset webinar for you guys, available on the website. That's it, guys. Thanks everyone who's actually engaged on YouTube. For all of the idiots out there making stupid fucking comments, you guys can go fuck yourselves straight up. You guys think I'm here for YouTube subscribers? You guys are fucked. If that's what you guys think. We'll see if I come back on this YouTube shit. I try, but man, idiots get to me, guys. I'm sorry. I'll see you guys tomorrow on Zoom. Have a good day, guys.
Recording stopped.
Hey guys, good morning. Welcome to the live session of Stocks Number Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell it, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.